everybody. Welcome to the James and Jaden Real Estate Podcast, where we talk about real estate and whatever else comes up. Today's what is today? Today is an experiment, and I really think you guys are going to like it. Jaden is in studio, but he's not in studio. Let's just, how's it going, Jaden?
It's going great. I don't know what's going on, but we'll see what happens.
So Jaden has really no clue what is really going on. He kind of understands the concept of what's going on here, but he's obviously in Florida, and we were trying to think outside the box of how we can get Jaden to be in studio, and I think we nailed it, Brady. I think we nailed it. Nice job, Brady. Okay.
I can't wait to see what this looks like. I'm there to go, and I think we have Zoom, and Google Meets already does this stuff, but we'll see. We'll see what happens.
Yeah, this is a little different. So comment if you guys like it. If we're going to probably do this a lot if this actually works out, because I really like this layout, and it puts Jaden in studio every single week instead of being officially live maybe once a month. So welcome, Jaden. Welcome.
How's it going?
Good. Sorry, we got off to a little goofy start there, but I'm okay with it. This is fun. This is what it's supposed to be. We're going to talk a little bit about SOPs and KPIs. I know it doesn't sound very interesting, but one of the things I want to get across to the new licensees that are joining us, or franchisees that are joining us, is know your numbers. And when I say know your numbers, it's know your KPI numbers. Jaden, give me the definition of a KPI.
Key performance indicator.
Okay. Tell me why.
You want to know what that means, I guess, besides that?
Why would we do this?
They can measure anything in the world, really. Like your speed in your car is a KPI, But in this circumstance, KPIs are for business indicators. So we try to track different things in the business to try to tell us how different parts of the business are working. And then all these different things will feed into the net result at the end of the year as net profit. So if your KPIs are all going well, then you should result in a good net profit at the end of the year. So it's kind of there like leading indicators to tell you what's going to happen later.
Right. And I think one of the biggest things that we teach, if you don't know your KPIs, then there's a hole in your business. When you know your KPIs, you know which direction your business is going, right? You know if it's going down, you know if it's going up, you know if it's staying level. So that's where we're gonna dive a little bit more into that. And again, why we do it. Another thing we're going to talk about, SOPs. Jaden, definition of an SOP.
Standard operating procedure. Basically, it's just a written down process for a specific job type, like a job that does something kind of repeatedly. If something's repeatedly done, you just write down the steps of the process. That way, if somebody quits or whatever happens and somebody else has to come in, they can pick up the document and just start doing the job. Kind of think of it like a factory. Like every factory station has a job, and there's a list of all the steps of what the job does. So if somebody new comes in, they can just, with a little bit of training, they can pick up the document and do the job.
Right. So one of the things is I didn't know much about KPIs. I knew a lot about SOPs because I've been in the fire industry. But a lot of entrepreneurs don't think they need that. They just think they know what's going on, right? They think they know their business, but do they actually? Again, KPIs tells you if you really know your business, right?
Well, I think the personality profile of an entrepreneur is opposed to standard operating procedures. So that's really where this comes from, I think, is that's why you see that people struggle with it so much. It's a personality thing.
Okay, you're probably right on that, because I struggle on
that. Well, that's where if read the book Traction, the EOS system talks about the visionary entrepreneur type person needs to have someone that is more of a profile of an integrator. The integrator type person loves SOPs. That's what they do, and KPIs. So if you can't do that, SOPs and KPIs, which most visionaries can't, but they're allergic to it, you pretty much have to get someone to help you do it. That's more aligned with that kind of work.
Because I think the visionary, we just try to get it done. We don't care how it gets done. It can
how
be
many
done.
years did I ask you to document your sales process, James? And you're like, it's impossible. It's not documentable. It cannot be done. You cannot repeat this process. It cannot be repeated. That's how visionaries think.
Right.
Not possibly document what I do.
I didn't even realize it. That like I was just doing me, right? I mean, that's my problem.
Well,
Sometimes,
entrepreneurs like to solve new problems and create new things and invent, and they like variety. And SOPs are the opposite of that. The SOP is like, how do we do this the same way every time? So it's always the same as consistent.
so
We don't change.
when do you throw in SOPs when you're? We're going back and forth here on KPIs, but
I would say I think as soon as, like, when you're a one-person operation, you don't really need them because you're the one doing everything. But as soon as you start bringing other people into the company, you should have SOPs immediately.
right,
Right. The first person you hire should be helping with SOPs.
right, because you always want them to continue to do it the same. So again, I struggle with SOPs too because I struggle like in the moment, right? Like I deal with in the moment where SOPs tells you to.
Well, and I think me and you and a lot of entrepreneurs are like, well, we'll figure it out. We don't need a document to tell us how to figure it out. But not everyone thinks like we do, and not everyone is going to just figure it out. So you've got to kind of have a documented process of how to do it for the general population of personalities to be able to do the job.
Right. I'm trying to go. I'm trying to stay on topic here, but I'm like KPIs and SOPs. What happens if you don't track them? I mean, what are you? Because I'll tell you, I know these guys that were in business for 20 years. They obviously were doing something correct, but they had no idea where their money was going. As soon as they grabbed everything and got all the KPIs straight, they actually started to make money because now they knew where their holes were, where the leaks were. I'm trying to figure out where I'm going with this. It's like,
well, yeah, I would go one step further and say, like, bookkeeping is a form of KPIs. Having good books and a profit and loss statement is a form of a KPI, and a lot of people don't even have that. So, what if you don't have good KPIs? What if you don't have good books? I mean, people do. That's pretty common, actually. In small businesses, that people have terrible books, they have no KPIs. This is like almost the most common situation.
mm-hmm.
If you're a really good entrepreneur and good hustler and good at making money, you'll be able to make it work for possibly a long time. But the problem is you can't grow beyond a certain size. The business will only get as big as your hustle will allow it to get,
Right.
And that's not big. In most cases, you can only hustle so much. So if you want to grow to a certain size, usually that size is about $1 million of revenue is about where you start to see things break down. Once you get past $2 million of revenue, if you don't have systems and processes and SOPs and KPIs, your business will not. You'll just plateau and you'll get stuck there, or you'll get to $1 million and you'll start losing money all of a sudden. You won't make any money because it's just not. There's no control or consistency with anything. So if you want to grow, you have to do it. If you don't want to grow and you want to just stay small, like a solo operator or solo person with one or two people helping them or whatever.
Yeah, but I'm trying to figure out where would you not use them now? Like, let me ask you this: KPIs. When did that really come into play? Because, like, when did people really start leaning into that? Is that something that's always been there? Maybe I'm missing out or something. I don't know.
Well, I think the KPI acronym probably came from EOS. I think is probably where it became really popular. I'm sure it was around in some form before that. I mean, any management education would have included. They might have called it something else, but
sure.
KPIs have been around as long as management has been around. But EOS, I think, popularized the term KPI. I think, at least in small business. So, but yeah, even if you're a solo operator, you should still have KPIs because if you spend money in marketing and you don't have KPIs to track how well it's doing, you might just be wasting money on marketing. Different channels might not be working. You wouldn't even know.
Right.
If you have 4 channels of marketing and the phone rings and you make some money, but you don't know which of the channels is actually making the phone ring, well, you're wasting money.
Because I kind of feel like that the mom and pop places would do that all the time. Back in the day, to know if your business was working, you would get a you'd put your number in a phone book, right? And you started with A because you wanted to be in the front of the phone book, right? So a lot of like vacuum businesses, A vacuum, triple A vacuum,
A1 vacuum.
A1 vacuum. Now you don't even have to worry about doing any of that anymore, right? I mean, that was that. I suppose that was kind of like a KPI back in the day. You tried to be the very first one in the phone book. Now you pay to be wherever you're to be the first person.
Right. So, what are some examples of KPIs that you would track for marketing now? Like, what are the things that we track that everybody should track for marketing?
Well, that's kind of where I was going with that. Is like this is why every time new mailings that go out automatically have a different number on it, right? Because
Different phone number. Yeah.
you're right. Because you got to know. Everyone's like, why do you do that? I'm like, I want to know where they're calling at. If I just have a general number on there, I don't know if my advertising's working. I
Right.
might
So the KPI is how many phone calls did you get off that mailing?
correct, right?
So first KPI, how many phone calls did you get? Second KPI is how many of those phone calls were actual leads and not just people calling playing to get off the list.
So what do you call those? So you got the phone rings. So the phone rings 50 times. You answer it. 50 people answer out of that.
Yeah.
Right.
And five of those are actual leads, and 45 are angry people telling you to get off the list. So you have 5 leads. So your lead rate on your phone calls is like, this is just an example, but maybe like 10%. And out of those leads, you try to book an appointment usually, and some percentage will book appointments. So that's your appointment conversion rate. That's a KPI. And then out of your number of appointments, you'll make a number of offers. That's your offer rate, because you won't make an offer on every appointment because sometimes it just won't make sense to make an offer. But out of those offers, some percentage will get accepted. And out of the ones that are accepted, some percentage will close and some won't. So that's why it's called a funnel, because it's like this large number of things. It goes down to a small number of things at the end. So every step you're losing some at every step. So the KPIs are to optimize every step of the process to get it to keep that funnel as large as possible. Right. So at the end, it's still wide.
So if whatever KPI is now is showing 0, it's telling you something's wrong in that area, or maybe that's it's even more. It tells you something's working or something's not
right.
working.
And then you track them, month to month, quarter to quarter, so you can see changes. So if you're getting leads, but you're not getting as many appointments as you used to, then something's going wrong with whoever's setting your appointments. Or you're getting appointments, but you're not getting deals anymore. So something's going wrong with the person that does the appointments.
Right.
So you can figure out what's going on before. If you don't have those KPIs, you just wait until your revenue goes down 6 months later. But then you're like, what happened? Why did our revenue go down?
Now, so I guess what you're saying is it's a lot easier to forecast when you know your KPIs.
Oh, yeah. I mean, you can absolutely. If you go, our leads are down 30% this month, and then there's a 6-month cycle on your business, your lead to cash ratio conversion cycle, then you can forecast 6 months from now our revenue will be down 30%, probably. Or something like that, So yeah, it tells you what's going to happen in the future.
Right. So I was just pulling up an email that we get from our leads person at the end of the day, and so I'll go through it. So number of leads during the business hour. These are our KPIs and what we track. So new leads during business hour, we had 5. New leads after business hour, there was 0. Leads qualified today is 2. Appointments from new leads is 2. And then appointment for follow-up is 0. Total leads this week, 28. Total appointments, 12. Number of leads to what is it? Number of leads with refund?
Refund from paper lead services.
Gotcha. And then she writes us a little bit of a note. Things are going smooth this week. No major updates or changes. So sometimes she'll write in there, hey, we're getting an uptick on listings that are calling that they want to sell us their already listed properties. And so that tells us to go in to tweak something, right? Hey, maybe something's not right. Give us another example, Jaden, what I just read off, what is that going to tell us?
Well, yeah, you see your quantitative KPIs that tell you if the numbers have dropped or changed dramatically in one way or the other. And then you have your qualitative, like, well, what does the person that's doing the job feel like is going on? And a lot of times that will describe the numbers changing. Hopefully hopefully what's going on, if we see the numbers change, hopefully there's a note as to why the numbers changed. So, if we see like 28 leads but only 12 appointments, that's kind of a low ratio for us. So one of the common reasons for that is like, a lot of people are calling with houses listed for sale that are just sitting in the market. They're really not, interested in a cash offer. They're just kind of kicking tires kind of thing.
Mm-hmm.
So that would result in a low appointment ratio. Yeah, it makes sense. But yeah, if you don't get a note there but the numbers are off, then you got to start asking questions like, what's going on? Like, what are you seeing that's causing these numbers to be off?
Right.
Well, I want to add one more thing to that. Like, without KPIs, the common thing I hear is it's called management by walking around. So if your company is all in one location, like your phone people and your salespeople and stuff are all in one office, if you don't have KPIs, you're doing management by walking around. So you're walking around and like, oh, the phone's ringing, that person's talking, this person's talking, there's deals happening. I feel like things are going good. That's not very effective management, obviously, but that's how a lot of people do it. I think we did some of that too early on. I would say we definitely did some of that.
Right. That was.
But you can feel like things are going well, and the numbers would show that they're not.
Right, but if you don't know your KPIs, it's a lot harder to scale, because how do you know where you're if you don't know where you're at? How do you know to scale?
You could be scaling a failing business.
Yeah,
you could be scaling something that loses money.
Yeah,
if you don't know your KPIs.
Yeah, I kind of feel like there must have been something else. There was something else people would go off of. Back in the day before KPIs, and maybe they still called them KPIs. I don't know. Maybe
it might have been called something else. I don't know. I think it's become more important because EOS is. I don't know. EOS is like 20 years old or something like that. Before EOS, most small businesses were not really running any standard procedures of how to run a business. They were just running by the seat of their pants.
Mm-hmm.
Most of them were. And I still think the majority still do, honestly. I think EOS businesses are not the majority of businesses. It's the more advanced businesses that want to scale and grow and want to do well, want to be successful. They want to push and grow and drive. Those companies are EOS. But your standard small business is not being driven by EOS. EOS is the entrepreneurial operating system. So that's what drives KPIs and a lot of the SOPs and right person, right seat, quarterly rocks, all these different things as to how you run a successful small business that's scalable.
So that kind of brings it right into the how do KPIs and SOPs work together? I mean, because obviously they're working together.
Yeah, I mean, they don't necessarily have to work together. There's SOPs that have nothing to do with KPIs. Like you could have an SOP about how we open the mail and stuff. How do we open the mail? How do we file it? Who's the mail go to? Really has nothing to do with KPIs at all. But there's SOPs on marketing. Marketing is heavy on KPIs. So the SOPs with marketing are related to KPIs.
Well, the KPIs tell you where your problem is. Your SOPs help you fix it, right? I mean, and if it's written correctly.
Potentially. I mean, like I said, there's SOPs that don't have anything to do with KPIs at all. Like, how do you write up a purchase contract? That's an SOP, how to write up a purchase contract.
Yeah.
But that has nothing to do with KPIs.
Hey, Jaden, so we talk about KPIs, we talk about SOPs. I mean, in reality, it's kind of related to accounting too, right? With KPIs and, well, maybe probably KPIs, right? SOPs is maybe the process of how you're going to get into the books, but
yeah, the SOPs would control how you do the accounting, and in a real estate company, it's really important because it's not done like a normal business. There's a lot of intricacies with how you do accounting for a real estate investment company.
Mm-hmm.
We could do a whole episode on that, and we probably should because that would be a good episode for accounting nerds. It would be, and we know a lot about how to do that. It took us a long time to get that right, and we're still fine tuning it. But yeah, the KPI, your accounting and your books are I think your most critical first KPI is your bookkeeping and P&L. That's your very first thing, because the second you open for business, you probably have expenses before you have revenue. So your expenses, well, you have a P&L that has expenses on it then. That's your first KPI.
Mm-hmm.
And that's I have seen so many small businesses that have terrible books to the point where you don't even know if they're making money or not. Like, how do you can't run a business like that. And even if you say, well, we know we're making money, well, why are you making money?
I think
How are you making money?
You can, but it's the scalability of it. If you know you're putting in 30K and always getting out 60K, okay, I'll keep doing that, right?
Yeah, they're making money, but if you look at the books, you're like, well, it's not really clear how or why or what levers you would pull to make more money because your books are so terrible.
I think that's the key right there. It's not it's knowing what other levers that got you to that point. You don't even know how to pull the correct levers because you don't even have any SOPs. You don't have anything. You just know that you're putting $60,000.
The company is quite difficult, so you need to make sure that is dialed in right away because fixing it later is really hard. Really hard.
Right. I think that was probably one of the very biggest, or one of the first things that we were told. Make sure we have good books.
I focused really heavily on it the first year of our business to make sure it was, and we went through a couple of accountants to get it done right. Before, I think we were probably, I don't know, on year 2 or 3 before it was really, really done very well.
Well, the hurricane messed it up a lot, but whatever.
Yeah. I had figured out how it should have been done right away, but we didn't have the right accountant to do it, and then it took us about 2 more years to get the right person to do it. But yeah, that's super important to get that done, to know what you're doing. And real estate investing business, because of the capital involved and the assets that are involved, is not a normal business. A normal business is like you sell a product, you make some money, you ring the register, you have cash flow, and you move on. You just keep doing that, right?
Right.
That's not how this business works. You're putting marketing out there, you're buying property that's going on your balance sheet for a long time, you're improving it over a long period of time, and it's coming off your balance sheet, hopefully within under a year, when you're selling it for a profit.
Right.
So you've got to do that cycle from the income sheet to the balance sheet and back properly. And that's, most businesses don't deal with that, and most bookkeepers and accountants don't deal with that, so they don't understand it. So yeah, that's super important. And we also started doing Profit First as well. And I'd recommend people read the Profit First book by Mike Michalowicz, I think his name is.
Are you getting into next week's episode?
What's that?
Are you getting into next week's episode?
Are we talking about that next week?
No, I'm just kidding. Just keep going.
Okay. I just came up with this just now.
I know, that's what I was like. It's like a really good topic. But go ahead. Tell everybody what Profit First is.
A really good book. You can watch. Actually, if you don't want to read the book, there's YouTube video summaries on it. Like, look up like book summary, Profit First book, like 10-minute video. It'll give you pretty much the gist of it in that. It's not hard to implement the first phase of that. Essentially, the point of Profit First is the way they do it is when you have revenue come into the company, you just take a percentage of revenue and put it into an account called profit right away. Like, it might be 5 or 10% of the revenue that comes in. You put it into a profit. It's like the first expense you do. You pay this profit account first, and then you pay all the other expenses of the company. So it forces profit right away in the company. Because what happens with entrepreneurs is they like to invest, and they like to reinvest and grow. So if you don't do that, what happens is the profit at the bottom of the business ends up getting invested in other areas just automatically, because that's just what entrepreneurs do. So this is a way to short circuit that problem that basically this guy found that pretty much all small businesses have. So that's a really good system to, and it gets more complex than that, but that's the first place it starts is with that profit account. Profit and tax account is the simplest way to do it. So we've been doing that. And then EOS is the other thing. So there's a book called Traction that talks about the entrepreneur's operating system. And that's really about how you structure the organization of the company, the people in the company, how you structure the cadence of the work week and the work day and meetings and KPIs and everything else. And that's kind of like the Bible for small business, really. It's the way you run a small business successfully. So if you want to grow and be successful in a decent sized business, you got to understand that pretty well.
Well, what's EOS? I thought there was a number of employees you typically have to implement it.
I think it'd be pretty small. I mean, I don't think you have to be. I don't know. I probably wouldn't do it for under 5 people, but because if you're like 2, 3, or 4 people, I mean, you can pretty much all be on the same page all the time pretty easily, as long as you communicate. So you don't need a lot of systems and stuff for that. once you're at 5 or more people, you start to get these disconnects where things start happening, and you're like, "Wait, how'd that happen? Why'd that person do that?" You have to start getting some more systems and stuff in place. So that's a really important thing too. And you don't have to do that the first year of your business, but as you're growing, once you get to 5 employees, probably you'll start thinking about that.
Right. Just make sure you got a really good integrator. And if you're a visionary out there, guys, stop trying to do it yourself. If you're a visionary person, just hire somebody to put stuff together for you, because I guarantee you're going to fail at it.
Yeah, and I would say, the integrator is the person that kind of makes the EOS thing work. There's also implementers that can come in and implement the EOS system, and then your integrator is the one that kind of runs it. But even before you do EOS, you can still have an integrator type of a person in your company, which I think you should, that can help you get some systems and things, even if it's not EOS. Just start getting a little more consistency in the business. Because if you're an entrepreneur, you're going to be really chaotic, and most people don't work like that. So it's going to be hard for you to have staff and stuff. And if you get somebody that's more of an integrator type personality, and we have personality indexes that and tests that will tell you if a person lines up with that or not. So that's what we use, see where they're on the spectrum of that. But as long as they're strong on that profile, it should be one of your first hires, really, unless you have that skill set yourself.
Right. Yeah, it's one of the biggest things that we found out is you got to have one with the other. I mean, they go hand in hand, right? You have an integrator who can't integrate anything unless he's being told by a visionary what he needs to put together. So
yeah, I mean, the most capable integrator in the world, if they're just an integrator and they don't have any visionary, and a lot of them don't, a lot of them are just integrators. They're super capable people, and I mean, they can run a business by themselves. They can do all these really great things, but if they're left to their devices, there isn't going to be a business. There has to be a business in place first,
right,
for them to really thrive. So that's where the visionary comes in. Is they're the ones that drive things forward, create the opportunities, create the future, and then the integrator, makes it happen.
So we've actually noticed this. We had Orlando come up, and Aaron's okay with me talking about this. Is he was always in these meetings, and he's like, "Yeah, we're going to do that. We're going to do that. Okay, and this is going to be a great idea. We're going to do this." And then all of a sudden, nothing would ever get done. And he's like,
Yeah.
"Wait a minute. I'm missing a person." I go, "Yeah, you're missing the person that puts everything together, the integrator."
That does it. Yeah.
And so, which was the most craziest thing, we were sitting there, and we literally stopped all conversations after that, because we need to get him an integrator. And so what we did as home guys, as being the mothership, let's call it, we now knew what he was missing, and we went out and we found him an integrator. And we did the PI test, and everything worked out. Now he's moving forward. So that's something that helps when you're one of the home guys nation, is you have that ability to like sit down in front of you and I and like how to fix this. All of a sudden, I just realized it. I'm like, duh, we have a gen. He was like, I need a gen.
Yeah.
And
well, I think it helped that he came and visited too. I think that probably helped too, right?
Oh, that was probably the biggest thing, I guess, is it's like he saw it in action. We can talk to people about how this all happens, but that's the reason why we have our own office. We want to show people that this works. And
you come visit the office, you see firsthand, like, what everybody's doing every day, where they're sitting, and how it works. You get a pretty good feel pretty quickly for how the business runs just by being there.
Right. Just like we just had Jeff and John come, and they're out of Pennsylvania. I mean, they're not part of Home Guys Nation, but they're part of Investor Fuel. And they came out and they're like, "Wow, we love your guys' operation." He's the one, you already know this. He's the one where we got the LED sign from, doing the dad joke. So
yeah,
Is-
Right, the idea. Yep.
yeah. I mean, this is why you meet up once a quarter and you go and you talk to other investors. I'm getting way off topic, but back to SOPs, KPIs. You almost, if you don't have SOPs and you're a show of more than one, a business or a business more than one, you should have them. KPIs.
Right.
If you don't do KPIs, whether you're just a single person or you actually have a team, you're gonna fail too. So
Right.
I believe they go in hand. What is it? The KPIs tell you um, whether to go up, down, left, or right, and the SOPs tell you how to go up, down, left, or right.
How to do the work. Yeah.
How to actually do the work. So
Yeah. Yeah. And the integrator, getting an integrator in your company or somebody with that kind of personality is really early on is really huge. And it's pretty cool that we have the network and the experience to just do that. It's not really something that we like. I don't think we ever thought like, hey, this is something we do and we're really good at it. But it turns out that I think we are, just because of our experience and our network and our just everything we have access to.
hey, I gotta tell you something, and I think you already know this, but I remember the very first time I heard KPI. Probably been doing this business for 6 months. We're down in Arizona. We're at our first meetup, and we ended up paying more to get on a hot seat so they could tell us what's wrong with our business. And I just remember literally, yeah, KPIs. Oh, yeah, I understand that. I had no clue. I had no idea what KPIs were.
Yeah.
And we're just literally was winging it at that time. So I think I finally told you later on, like, dude, I had no idea what KPIs were. Thanks for taking that question. But
I
you got
figured you didn't. I mean, I knew what they were.
yeah.
Yeah.
I
So,
remember, but I'm only less than 6 months of not being a firefighter, and this is my full time gig now. Is going to these meetups and understanding everybody. Yeah, I've come a long ways. I got 9, 10 years. So I learned, gosh, I learned probably 90% of it from you. So I do appreciate that.
yeah, learned a lot. Yeah, I mean, always wanted this business to be a systematized, repeatable business was always my goal. It wasn't like I never really wanted it to be just a mom and pop, fly by the seat of the pants, figure it out as you go, forever kind of business.
Hmm.
So we've always, spent the time and energy, which is a lot of time and energy, into things like accounting and KPIs and dashboards and consultants to come in and help us run EOS type systems. And we've really spent a lot of time over the last number of years doing all that
Hmm.
and learning about it. So
Hey, I always joke around that, well, didn't really joke around before, but I didn't go to college. And but boy, have I sure paid for an education in this business.
yeah, well, you did some college.
Well, I take
Well,
that
what
back.
you
Yeah,
know,
I mean, I have. Yeah, I'm probably this close to a fire science degree, but that's just because of my fire the industry. But why do I need to go get it now? 50 years old. Um,
yeah,
I mean, if
well,
any, it would be
right,
kind of cool in some aspects, but again, I don't use that. I use my knowledge now because of the internet. I mean, how often do we use this cell phone that we have that we're constantly looking up information?
yeah. Well, you have an MBA in small business at this point. Um, I have a, I have an MBA from a school, and I have an MBA in small business, and the small business one is a lot more valuable. Say that.
Yeah. That's the crazy part about it. It's again, I didn't even think I liked school, but I mean, we've been literally schooled the whole time. I mean, we're constantly learning. We're constantly learning new things. Um, new things are popping up in this business all the time. So,
Yeah, you
um,
can't get bored in this business. That's one thing. All my previous careers and jobs and stuff. At some point, I would have figured out the job, and been really good at it. And it just like, well, it's just the same job. Like it's just the same thing. Like it's kind of boring. And this, I have not had a boring day since we started this business. I don't think it's not possible. So there's every day is different. Every challenge is different. So
might have a few more slaps to the forehead, like
there
but
are some days where I wouldn't mind having a boring day, but I remember noticing that the first year of the business, I was like, wow, this is never boring. It's like impossible to be boring.
yeah, we definitely have slow times, but it's definitely very interesting. It keeps us on our toes all the time.
But even during a slow time, it's like, it's not boring. It's just slower than normal. You know, you're still doing things that aren't boring. There's still new things happening, and there's new things you can learn, and
right.
every deal is different, and so.
No. Well, hey, we're getting to the end here. What are we at for time there, Brady?
30 something.
Oh, yeah, we got about 30 minutes in.
We recorded a bunch before, so I don't really know.
Yeah. Hey, guys, if you want some more information about any of this, feel free to reach out. We are a book of knowledge. Even if you don't go down the Home Guys Avenue, we can always lead you down a different path, helping you out. Whatever you like, by all means, write a question in there. A little teaser, I believe sometime maybe in December, we're going to do a Facebook Live for an hour. Jay and I are going to get on there, and you guys can ask questions. So let us know what you want to hear, what you want to talk about, and we'll talk about it. And got anything else for the?
Yeah, I would just add that I'm an open book. I like helping people. So if people have any questions, feel free to email me. I don't know how you get my email address, but maybe reach out to Brady or James, and you can connect them to me. So I'm on LinkedIn too. You can message me on LinkedIn. So yeah, I'm an open book. I'd like to help people. If you have any questions, we'll try to help you out and point you the right direction. I'd always wished that I had a mentor or somebody to learn from when I was younger, and I looked around all over the place for that. I never found it. So love to help other people if I could.
Yeah, that's something that we both really have as a passion. Is like somebody comes to us and they truly want to, learn something. Boy, we're all over it. We just maybe by default, maybe sometimes.
I mean, I feel like I wanted that for many, many years, and I never found it. And I'm like, we've had to learn everything ourselves. I mean, I haven't been taught a single thing in real estate by anybody.
Hey, that's because we're Gen Xers, and we just have to put our head down and move forward.
Yeah.
I mean, you know what? I kind of laugh a little bit about that, but in reality, that's just what we did. We didn't have play date. Did you have a play date, Jaden? Did your mom set a play date for you and Trevor? No, right? She just told you to get outside. Go outside.
Why are you bothering me? Get out of the house.
So and again, it's not a bad way. It's just how we Gen Xers were raised that way. So, but we definitely do like to give back. So, hey guys, again, subscribe. Just remember, Jaden.
We made all the mistakes, so you don't have to.
Yes, thank you. Let's try that again.
We made the mistakes, so you don't have to.
We made the mistakes, so you don't have to. See you next time.